After a year of interest rate hikes, customers at this salon are already cutting back.
They'll be saying, well, I'll have the cut today, but I'm not going to have the blow dry, or a half a head of foils instead of full head of foils, just to bring their overall bill down.
The Reserve Bank's 11th rate increase also worries business owner Michelle Follington. She has her own debts to service, including a business loan that's secured against the family home.
There is always that pressure there that, you don't want to lose your house. You go to work every day and you keep going because you don't want to lose your home. That's so important. Where that extra cash comes from is the tough part.
At a dinner for business leaders in Perth, the Reserve Bank boss defended the latest rate rise.
The alternative is persistent high inflation and ultimately even higher interest rates and a worse outlook for jobs. We have a really strong focus on doing what's right for the country.
Resolute Philip Lowe explained why.
We've seen further evidence that the Australian labour market is still very tight, that services price inflation is proving to be uncomfortably persistent overseas, and that asset prices, including exchange rate and housing prices, are responding to the changed interest rate outlook.
But the rate rise has sparked anger.
I'm not sure that 11 interest rate rises in 12 months is smashing inflation. I'm certain it's smashing families.
Businesses are also reacting. In the past year, industry activity and sales have been declining, which, if it continues, is likely to lead to job losses.
It's going to be a really tricky second half of the year. Even though inflation's coming down, prices are still rising and they're rising off a higher base. So a lot of these businesses will still see small increases in their pricing that their suppliers are charging them, but then demand will start reducing.
The Reserve Bank's latest rate hike is designed to shock. It wants us to worry and reduce spending to get inflation under control. But there is growing concern the RBA is playing recession roulette, and that just one more rate increase will be enough to tip Australia over the edge. Insolvencies for restaurants, bars and construction firms are already surging.
Particularly in the construction sector, we're going to see a lot less houses built over the next cycle.
New home builds hit a record low in February.
We're seeing a lot of projects be put on hold or just waiting to see what will happen before the clients are comfortable with pushing go on a project.
The construction industry warns the housing supply crunch will only drive rent and property prices higher.
The number of people who are suffering in trying to find housing at the moment is huge, and we're seeing it more and more every day. And with an increased migration, obviously we need more houses for people to have a home to live in.
One consequence of the Reserve Bank's blunt tool to curb inflation.